Have you ever wondered what would have happened if you had invested in the Confederate stock market? It's a question I'm sure we've all asked ourselves at least once. So picture this. It's late 1860, and Abraham Lincoln has just won the presidential election. While he tells the southern states that he has no plans to take away their slaves, nobody believes him. Within a month, South Carolina threatens to secede, and by February 1861, another 6 states are heading for the exit. War seems very clearly imminent, and stocks around the US react by dropping some 20% from their autumn highs. So let's say that you're a well-off southern planter with plenty of cash to invest. You see this stock market discount and decide that it's time to buy. But what do you buy and where? Lest we forget, the 1860s were a time of disparate stock exchanges quoting local companies. So, what you could buy in Boston differed quite a bit from what you could get in Charleston or New Orleans. The largest companies could see their stocks traded across states, but otherwise the pickings were mostly local. Certainly at the top of your hypothetical shopping list would be railroad stocks, which were all the craze in America for the past 3 decades. You'd have a plethora of local southern railroad companies to choose from, but they'd usually be small and risky. You could also pick your favorite from the big northern lines, like New York or Pennsylvania, but they would very soon become difficult for you to own. Another popular purchase for investors of the era were banks. Like the stock exchanges, banks were usually local, chartered in a single state and very rarely operating outside of it. Southern banks in particular were very conservative and held as much as a quarter of their assets in gold and silver. So if you were an investor worried about the ominous storm clouds looming on the horizon, buying bank stocks was seemingly a very safe choice. A third, less popular choice for stocks in the South would be manufacturing. Anything from textile factories and ironworks to paper mills, salt works, and various other fledgling enterprises. Industry was never a big hit in the South, which preferred relying on the labor of enslaved black people. This was, after all, a big reason for seceding in the first place. Now, once war actually broke out in April 1861, your portfolio was effectively split in 2, just like America itself. All the stocks you held in the South were politically safe, but the companies they represented were suddenly disconnected from the vast market of the North. The Union blockaded all southern ports in April and formally banned all commerce with the South in August, so unsurprisingly, your southern stocks took a big hit. As for your northern stocks, they too would trade at a discount due to the outbreak of war, but the bigger risk for you was political. While the Union didn't perform blanket seizures of southern property, unlike what the South did in return, you were still at considerable risk if anyone in the North accused you of actively supporting the Confederacy. But as long as you kept your head low, your northern stocks would actually do pretty well. By late 1861, they would have regained their losses, and by 1862, you would have even turned a profit. However, even if the Union government let you keep your northern shares, you would have practically no way of actually enjoying your gains. Communication was forbidden, as was the payment of dividends or the sale of shares, so you were effectively locked out of your northern capital for the duration of the war. Now, when the war got underway and the Confederacy made some initial gains, fear in the Confederate stock market began to subside. It turned out that the South wasn't as vulnerable as the North had imagined and would, in fact, put up a very tough fight. This optimism, combined with the big surge in military contracts, pushed the stocks of many Southern companies higher than they had been before the war. Railroad stocks, in particular, boomed, steadily raising their dividends from 6% in 1861 all the way to 20% and more by 1864. However, All these spectacular returns were being made in Confederate dollars, a currency that was rapidly depreciating. The Confederacy was printing money out of thin air to pay for its war effort, increasing the money supply by a factor of 10 in 4 years. Worse yet, the Union blockade was becoming tighter over time, especially after the fall of New Orleans in April 1862. So while your southern stocks were seemingly going to the moon and paying fat dividends, you were actually losing money in real terms. But speaking of going to the moon, you'll be happy to learn about our dear friends over at Jersey. While it's a lot easier to access the stock market today than it was in 1860, many companies stay private for years or decades, leaving the biggest gains to insiders with special access. Jersey is looking to change that with their pre-IPO investment platform, which lets you invest in the world's biggest private companies before they hit the market. These investments are held securely in the blockchain and are fully tokenized, which makes them significantly easier to trade than regular shares. Each token is fully backed by real equity held by Jersey, and you can invest fractionally with both traditional currency and crypto. Investing in private companies does carry risks, but luckily the world is much more stable now than it was in the 1860s. So click the link in the description and get access to the world's most valuable private companies on Jersey. Now, in the Confederate stock market, there was one sector that performed so well that it managed to beat the hyperinflation. Starting in 1863, Southern entrepreneurs began organizing blockade runner companies. They would purchase fast steamboats from Britain that could outrun the Union blockade, and would use them to make round trips between Confederate ports and the nearby British islands of Bermuda and the Bahamas. The blockade runners would load up on dirt-cheap cotton picked by slaves in the Confederacy and would bring it to the British in exchange for gold, silver, weapons, and medicine. These smuggling routes were so profitable that a single successful trip was often enough to pay for the whole ship. Blockade runners could earn upwards of 300% returns per year, assuming, of course, they don't get shipwrecked or captured by the Union. In reality, individual steamboats rarely made more than a few trips before being captured, but even these total losses were worth it for the stockholders. However, by the end of 1864, inflation in the collapsing Confederacy was turning even the blockade runners into a losing bet. Atlanta had fallen in September, and just a single major port remained in Confederate hands for blockade running. The Confederacy was split in 3 and was rapidly being occupied by the Union from all sides. In the final months of the war, you, as a Southern investor, would be looking to sell your stocks for gold and silver, but you'd be unlikely to find any buyers. You'd most likely end up holding onto your stocks for dear life and hoping that the invading Union armies don't destroy their assets. What ultimately happened to your fortune depended very much on which particular companies you had invested in. If you held the stocks of banks, you were most likely out of luck. The vast majority of Confederate banks went bust, as most of their assets were in now worthless Confederate currency and bonds. To make matters worse, the US government voided all loans made in support of the Confederacy, so in the end, just a handful of banks managed to survive the war. Railroad companies had a better chance of survival, but most of their assets were ruined by the war, so shareholders had to endure years of reconstruction. Blockade runners had their entire business model disappear overnight, so the only thing left for you from these stocks were the dividends they had paid you during the war. Ironically, your best odds were in small, local manufacturing businesses, whose factories had remained intact. In that case, you might see those stocks return to profitability within a year of the Confederate surrender. When the stocks of surviving Southern companies began trading again in late 1865, their prices in Union dollars were only about a third less than they had been in 1860. So, at first glance, your losses weren't all that bad. But if you account for the inflation the Union had endured during the war, your dollars would have lost about 70% of their purchasing power. So, in reality, your stocks were worth barely a third of their original price. But if you didn't pull out your money at the first opportunity, your stocks would more than double over the next decade during Reconstruction. So all things considered, you'd still make it out with a portfolio, which is a pretty good outcome for someone on the losing side of a war. Investors in the Nazi stock market, for example, wouldn't be so lucky. But in any case, let us know what other topics you'd like us to cover and maybe even consider supporting us on Patreon or buying our merch. Thank you very much for watching, and stay tuned for the next optimistically secessionist episode of SideQuest. Why was the Confederate general mad at his extended family? Because they were trying to organize a reunion.